Today I will tell you why I am waiting for the next stock market crash. Hi, I'm Henrikh from Value Investing. And yes, I'm currently in 2020, waiting for the next stock market crash. Of course, I'm not expecting to see the crash to be exactly in 2020, but waiting to see one within a few years. As true value investor never times the market, so do I. And waiting is a very important part of investing, whether you are sitting on cash or you are mostly invested. And that is the biggest advantage you can have against Wall Street, as most fund managers can't take the investors' money and say that our best strategy for 3 years is sitting on cash and waiting for something. Mostly they are forced to bring some returns on invested capital, and this is why they can't manage their portfolio as Warren Buffett does. As Benjamin Graham wrote in his book, you better have 25 to 75% of your portfolio in stocks and the other 25 to 75% in cash, depending on the times. I mostly try to behave that way, but if we have a recession like 2008 and the stocks will be way undervalued, I think I will have no cash position. And the question is, what if you are mostly sitting on cash, but the stock market still remains in the uptrend? Well, be sure that it's better to miss 5 to 10% gains for 2 years, but instead build the strongest position when the stock market crashes. Anyway, in almost any timing, I am against sitting on cash with your 100% portfolio. In my opinion, there can be times that you can have zero cash, but no time that you can have zero stocks, because the downside is limited but the upside not really. Did you check how much cash or cash equivalent does Warren Buffett have via his Berkshire Hathaway company? Yes, it's almost $140 billion. Yes, with B, billions. Many bloggers write about this with capital letters that Warren Buffett is positioning against the stock market crash. But I will disappoint them by saying that $140 billion is almost 25% of his portfolio. So he is almost 3 times more in stocks. But let's remember what Warren Buffett once said. Opportunities come infrequently, but when it rains gold, put out the bucket, not the thimble. So we can imagine that the stock market crashes happen infrequently, but when it does, you must be protected. You must be waiting for it. Because when it occurs, it's already too late to start preparing. You must be prepared beforehand. One of the biggest mistakes investors do is not being prepared for all directions. They stick to one direction, and that's when they lose heavily. Now you will wonder that if Warren Buffett is only with 25% in cash, that's a good indicator that stocks will go higher, and that's a good opportunity to be mostly in stocks. Well, let's not forget the portfolio size he manages. Do you really think that managing $10,000 portfolio or $10 million portfolio is the same as managing over $500 billion portfolio? That's a no-no. It's not easy to go in cash selling, for example, $300 billion worth of stocks. The big guys move very slowly, otherwise they will become the reason for many companies to crash. So now, as the stock market crashes happen infrequently, let's go to some statistics. The history showed us that once in every 5 to 7 years we are having a stock market crash. Now it's 2020. Did you count how many years passed from the previous 2008 crash? Yes, that's a full 12 years. So this can be the first thing you keep in mind. Remember, if you want to become rich, you will need only a few times to be right in your lifetime. There is absolutely no need to have high IQ, high professionalism, high skilled, or be the best analyst. Also, there is no need to understand all sectors in the world, no need to be the cleverest guy in the world. Yes, there's no need to be expert on human relations. There is no need to be an insider or be in network of billionaires. Forget all myths about becoming rich. Of course, that's not a 1-2 step easy thing, but that's also not a rocket science. All you need is to be right 1, 2, 3, 4, even sometimes 5 times in your lifetime. Many people don't start a business because statistics shows that 90% of businesses fail in their first 5 years. Yes, that's true. But remember, you can fail 100 times, but you will need only a few times to be right in your lifetime. So please be right next time stock market crashes and gain the phenomenal returns. Oh, by the way, these are my favorite top 10 books about stock market investing. If you don't have any of those, you definitely need it on your bookshelf. To ease your job, I put the Amazon link in the video description where you can go and grab it with just one click. If you want to expand your skills in this sphere, those are the most valuable books about stock market investing. You can learn a lot starting from Benjamin Graham, the father of value investing, going to Warren Buffett, Phil Town, the Rule 1 investor with his daughter Daniela Town, Guy Spire, Peter Lynch, the 29% guy, Jason Zweig, one of the greatest minds, Robert Shiller from Yale University, and of course Andy Tanner from Rich Dad Education, founded by Robert Kiyosaki. These books include both easy reads and hard reads for beginners and also for pros. Reading all those books will put you in a big advantage in the stock market. Go buy them for you and for people whom you care about. The links are in the video description. Let's discuss another reason why I am waiting for the stock market crash currently. Of course, there are many reasons. You also can find many in my other videos, but let's take a few of them this time. I want to bring up what John C. Bogle, the founder of one of the biggest funds in the world, the Vanguard Group, wrote in his book, which is called The Little Book of Common Sense Investing. In this chart, John C. Bogle shows which metrics drove the market since 1900. We know that historically the market rose by about 9% annually, and he shows the reason behind that, where that 9% came from. That's the 3 metrics summed up: the dividend yields, earnings growth, and the speculative returns, which is basically the change of the price to earnings ratio. Let's try to predict those 3 metrics and see what is our total market return potential. The historical average dividend yield was about 4.4%. And how much is it now? Under 2%. Yes. That's dividend yields keep dropping all the time. What do you think will it go to in the next 10 years? Maybe 1%? Let's go to the earnings growth, which was about 4.6%. Let's assume it will continue to grow at about the pace of our economy's expected nominal growth rate of 4 to 5% per year in GDP. Let's take that number to be the same in the future. Let's go to the last metric of the price to earnings ratio. Where is it now? Yes, it is near the highest levels that have been only 2-3 times for decades, for more than 100 years. And last time we passed these levels, we had the 2008 recession. Where will it go in the future? I think down to historical averages of about 15, as it did last time. Robert Shiller from Yale University wrote an entire book about the historical price to earnings ratio, describing that when the ratio is over 15, like 20 or 25, then the market is too overvalued and the investors can expect a correction within the next 10 years. So what is our total image? We have 3 metrics where we think one will stay in the same levels and the next 2 have already crashed heavily or will crash in the future. So where will go the market in the next 10 years? I hope I could bring you the big picture of what's happening in corporate America. Thanks to John C. Bogle, who opened our eyes explaining why he is not expecting the same 8 to 10% returns in the next 10 years. And by the way, if you want to get this book, you can find the link in the description. You just one click and you are in the Amazon website. Now I mostly want to know your thoughts about the market expectations, the portfolio allocation, and overall your plans for 2020. Leave your comments below and subscribe. Also hit the bell icon to get notifications when I upload a new video, that you don't miss it. And if you could take any value from this video, please hit the like button and share with your friends. Thanks for watching. Have a good day.